Good evening, good afternoon, wherever you are in the world. What is good, ladies and gentlemen? Yes, the riots are still being a problem in the United Kingdom, so we ain't going to be going back there anytime soon. But more importantly, what are we talking about today? Well, what we're witnessing across the board is the markets they're recovering a little bit, okay? And people are calling it a short squeeze because it looks like things ain't going to be look too good for the later future, and we understand that to be the case because of what's going on with the United States bonds. Everyone is rushing to these because they are fearing that things ain't going to be looking good in the near future. What are we talking about? Recession. Now, the next step is what is the Federal Reserve going to do? Are they going to cut the interest rates at the rate that investors are expecting them to? So you have to jump back to before they started increasing the interest rates and look at where the United States was. We had pretty much zero interest rates. It was like 0.25. And then all of a sudden, they started to increase them quite aggressively. And we had a massive jump up, which has taken us to the 5.5% rate that we're at now. Now, Wall Street is expecting the same sort of flavor from the Federal Reserve. Now, we've got this weight right now where it says, are we going to stick to our mandated 2% inflation target, or are we going to just cut the interest rate so aggressively so that we can get money pumping back into the marketplace? And this is where the weight is being balanced. Investors are anticipating that the Fed is going to cut the rates, but if they do not get the rate cut that they want, that's going to be a little bit of a problem for the United States because the economy is actually suffering right now. It's starting to cool. And the idea of a hard landing is getting closer and closer unless the Federal Reserve starts to act quick. Now, in today's video, what I'm going to do is prepare you all for the New York Open and what we can expect going into the trading day, because we do have a very important bond auction that's coming out, which is going to tell us if investors do think that the economy is going to have a hard landing. And if they believe that that's going to be the case, then we should see a lot of bonds being purchased today at the auction. Naturally, that's going to bring some volatility in the market. So what I'm going to do is break down price action across several asset classes so that you guys are aligned with how to anticipate how to find opportunities in trading. I'm also going to talk you through a quick trading strategy for all the guys that are trading during the Asian session. What I found is Asia tends to make some nice moves, and that's when the US session itself brings the crazy volatility. It moves up, it moves back down, and kind of bullish traders. So trading the Asian session could be sort of an easier way to try and test what it is you know about trading, whether it's the hybrid system, whether it's any other system out there. So with that being said, let's get into the charts. Let's break it down and understand what we can expect going into today. So we break it all down with this article right here, where the markets are effectively looking for Powell to start cutting the interest rates pretty aggressively. Well, what do we need to understand about it? The Bank of Japan increased their interest rates. That has caused the actual crash that we witnessed over the last couple of days. Now, what it means is the Bank of Japan's yen is more expensive to borrow. Now, look at where the dollar is. If you're going to go and borrow money, or should I say borrow dollars, you've got a benchmark rate of 5.5%. Now, the markets want Jerome to cut the interest rates pretty aggressively so that it can start getting people back into borrowing dollars. Now, if Jerome Powell is saying that he wants to maintain the idea of a 2% inflation target, well, there runs the risk of a recession. Why? Because the unemployment market is actually starting to rise. The US economy is starting to contract. It's getting cooler, which means there's not that much activity. And if the market does not receive the desired rate cuts that they want to see, that's naturally going to be leading a lot of investors to going into the 10-year bonds market because they need to put their money to work, but they're not willing to take on high risk. That naturally means that the stock market will continue to drop down. That can have also an impact on cryptocurrency. And the question that's always on our minds is, when is cryptocurrency going to buck the trend and say, you know what, forget you guys in the stock market. We don't want to see a positive correlation in the sense where when the stock market goes down, Bitcoin goes down. We need a negative correlation so that when the stock market goes down, Bitcoin moves back up. Going into the article, it does say that the market is eyeing the Fed if the Fed finds itself either poised to head off into a recession or doomed to repeat the mistakes of its recent past. It's kind of tricky because one way or another, if the unemployment market keeps on rising and people are still claiming benefit and there's less work available, you only need to hear what Intel had said, and they're looking at slashing people's jobs and cutting it all back by the favor of shareholders because of what's going on in the AI space. It's getting expensive to run these AI machines. Going on to that, ladies and gentlemen, we've got the article right here regarding the Bank of Japan send a dovish signal after the rate hike spurred market meltdown. And what's interesting about this is the Bank of Japan's governor, Uchida, can't even say his name correctly. He's saying that the actual drop-off wasn't necessarily the carry trade principle, but the fact that investors around the world are fearing that the US economy is going into a recession. So it's who's blaming who. We started the week off with the carry trade principle. Oh, the Japanese, why did they increase their interest rate? It's forced investors to close off any exposure that they had in dollars and then sell those dollars and move them back into the Japanese yen to help sustain the yen. But now Bank of Japan is saying that investors are really quite concerned about where we're going in the US economy. Now, today, at around 6 p.m. UK time, we do have the 10-year bond auction. Now, this is very important. Going over into the actual data itself, you can see here, this chart shows the 10-year bid to cover ratio. And to simplify it, if we have a high bid to cover ratio, it means that there is a demand for 10-year bonds. Now, that means naturally that money is going into the bonds market. Now, you may have heard me say in the past that if the stock market is going up and the bonds are going up, it means that investors are looking to take on high risk as well as low risk. But if you end up seeing the stock market dropping and the actual bonds market rising, it means that investors are no longer looking for high risk and they really want to protect themselves. So that's why they will go over to the bonds market. Now, this is where it can get a bit tricky. What if you get a bad bid to cover ratio? That means there's not that many guys looking to buy American bonds. What's the alternative thing that they can go into? Cash. This is where the dollar dominance can come into play. So we go over to the dollar dominance and you can see that dollar right now is slowly but surely trying to make a move to the upside. And I've got a couple of levels marked off here, which will give me the idea. If the dollar does maintain its rally to the upside, then we're going to be seeing the dollar coming back into this area right here, which in principle is going to be compromising the euro, which could effectively send the euro back down. Now, with that being said, we look at other articles across the board to see what could be facilitating this idea of maybe a not so good bid to cover ratio. Look at this. The summer storm is what they're calling it. And even the actual Financial Times are turning around saying that the Bank of Japan's pressure on the stock market and markets globally has caused a lot of people to feel a little bit concerned about where we're heading in the near future. Now, going further into the article, it's just giving you a breakdown of what's been going on about the Japanese yen and the Tokyo stock market. You can see share prices across the board are taking a tumble, like Nvidia, ARM, Intel. It's just a complete bleed to the downside. And it all happened at once. And then when we go even further into the article, look what's going on here. The volatility index, you can see how it peaked out at significant highs. And the volatility index principally does say the following, that when it's high, you buy. So we go over to the volatility index and you can see that it has made a move above 30. And you've heard me say in the past that when it's high, you buy. So if you manage to buy when the volatility index cleared that 30 zone, and look at where it went to the 36, you would have been laughing with some profits right now. But when we actually look at where we are, you would have had to have taken a very interesting position. That would mean you'd have to be going long at these lows right here on the NASDAQ at 17,315. And of course, with Bitcoin, let's say Bitcoin has made a better move to the upside because it has recovered from 48,000 going all the way to 57,000. Okay. But as they have initially made the reaction already, now we're waiting to see what the steps are from the Federal Reserve to actually save this economy and prevent a hard landing. Now, a hard landing, ladies and gentlemen, is on the idea that you've got yourself an economy that has got high interest rates. And if the economy is going to suffer because of these high interest rates, that is what is called a hard landing. So it means that it's going to be hard or difficult for the economy to get itself back up on its feet again. Whereas if you've got a soft landing scenario coming into play, which is what the illusion was, we saw the economy doing very well in the last bits of data. Manufacturing index was showing positivity. We were seeing the see actual prices showing positivity. We could see the Empire State Manufacturing sector. They were doing good. And remember, these manufacturing details or the indexes that come out every single month tell us where we are economically. And let's take the Empire State Manufacturing Index. This uses 300 purchasing managers and asks them a number of questions and says, what do you think about the state of the economy in terms of purchasing, contracts, employment, where you see in the future, what is it going to look like for the business? And those 300 purchasing managers tick off a survey, and then that data then gets put out to, hypothetically, the Federal Reserve, and then they tick it all off, and then they make their decisions based on what the data is presenting, okay? Well, that's what it was like before the FOMC on the 31st of July. Now, things are a little bit different because we've had this carry trade principle coming into play. You've got investors now seeing that the Bank of Japan increasing its interest rate, forcing investors to get rid of risk, sending the dollar down, sending the stock markets lower. You then got to say to yourself, okay then, is this move to the upside going to be sustained? Because what we're effectively trading is the hope that the Federal Reserve does cut the interest rates aggressively. But if they do cut the interest rates aggressively, they then set the markets up, or should I say, the economy, for another inflation spike. And that's why we've got to feel a little bit bad for Jerome Powell, because that's all on his head. Now for some cryptocurrency updates. So we've got this great article by Bitcoin Archive suggesting that Morgan Stanley's 15,000 wealth advisors are actively now going to be pitching the Bitcoin ETF to its clients. Now, the good news is that means that there's going to be some more Bitcoin activity. So they're going to be buying Bitcoin. Happy days. But you have to have a net worth of around 1.5 million for you to be considered in being able to buy this ETF. That's great news, isn't it, guys? Happy days. Wall Street has now picked who can and can't buy cryptocurrency. Surely it's decentralized, but here we are. We're getting an example of what it's like with Wall Street getting involved in the space of cryptocurrency. Now, with that being said, going over and have a look at where we are with the ETF, you can see here it says US spot Bitcoin ETF see 148 million in net outflows, and Ethereum ETFs show a log of 98 million. So it looks like they're favoring more Ethereum than they are with Bitcoin. But then we go over to this article over here by the Daily Hodl, and it's saying that Benjamin Cowen, he's telling his followers that Ethereum is due to take a little bit of a correction to the downside. And going into the article, he's saying that Ethereum Bitcoin pair itself is going to break down from this price point, which means that he thinks that Ethereum is going to correct down to around $1,150 a coin. Now that is a pretty big correction, if I may say so, and that would then put Ethereum in the following situation. Going to the higher time frames, we can see that if Ethereum were to come down towards that 1,150 zone, that would be a full clear recovery of the following vector candle. So look here to the left, you can see at 1,687, you've got the green vector candle region all the way down there, and then going down even further in towards where Ben believes price is going to go to, that would take us towards the last area of support right here, which sits around the 1,118 region. If Ethereum were to lose that point, ladies and gentlemen, then that is just absolute havoc across the board. And if that means Ethereum is going to be going down that aggressively, then that can only mean that Bitcoin could be following suit. But what we're seeing is Bitcoin has traveled a little bit more further to the upside in comparison to Ethereum. So that means Bitcoin will probably travel much faster to recover these areas of vectors to the downside, which could take Bitcoin to a final point of around $30,000. Now, whether you think that's good news or bad news, fundamentally it means that Bitcoin is going to be cheaper for you. And why would you not welcome the idea of Bitcoin being cheaper? When you zoom out and look at the chart, you can clearly see that Bitcoin is at what we would call a premium. So it's expensive right now. And you tell anyone what Bitcoin's price was before this massive run-up, they would say, oh, what was it before the run-up? Oh, it was $15,000. Well, it was expensive then anyway to the average folk. But then when you see it going all the way up towards the 70K zone, and then you're saying to yourself, maybe that's a little bit more expensive. I mean, what do I need to do to hold one Bitcoin? I've got to effectively sell my house, sell my nan, sell my lungs, sell my dog, and then I'll be able to actually pick up one Bitcoin. Well, that's not going to be appealing to anyone. And remember, in the street, as in Wall Street, they are not loyal to price. They don't care if it should be at a specific price point. Cryptocurrency dudes, they believe that a certain price has to hold, and it must hold because it must hold. There's no weight to it. Ultimately, Bitcoin will be priced at the point that someone is prepared to sell it at and buy it at. Going over into the bids and the offers of Bitcoin, you can see right now that we have got what is going in line with this squeeze. And you can see that we've got lots of guys that are wanting to sell Bitcoin to the sum of around 58,400. And we go down even further, you can see there's a little bit more here to around, 10 million at 58,240. So in the short term, we could make the assumption that Bitcoin is going to come up and clear these ranges. And if these guys don't get their orders filled, then we've got this bed of bids that are prepared to buy Bitcoin. And when you zoom out on this chart, you then look at it and say to yourself, well, what do you see more of? Well, it's evident that you do see that there are more people looking to buy Bitcoin, which all the way down at 47,299, you've got yourself $19 million worth of Bitcoin. Now, I will say this. I said that I'd be expecting Bitcoin to try and go towards the $85,000 mark in September, because that's when we would anticipate the rate cut. Okay, so whatever happens from now up until that point, Bitcoin in principle would have to make an aggressive move to the downside. So if we were to look at it like this, an aggressive drop lower and then just as much as an aggressive move back up, because there will be an influx of orders buying up the Bitcoin and then everyone will lose their minds. The state of capitulation could come into play. People will just give up. And then that's when Bitcoin would initially make the reversal to the upside. Now, as promised, I'm going to talk you through this strategy about the Asian session. Now, if you haven't done so already, go check out the Platinum membership where you get a 20% discount on your first month. Now, that code is called New Member, and you'll find that in the description of this video. But every single day, you'll be getting setups across 6 asset classes: the Euro, Gold, Oil, Bitcoin, Ethereum, Solana, and you're going to be understanding the hybrid system in more detail and how to really trade it in your everyday. Now, last night, at the Asian session, what we were looking for was, as an example, here was Solana. Now, out of the two, which was Bitcoin and Ethereum, we wanted to see if they were going to break down. And the one main thing about the hybrid system is you've got to look at it in terms of probabilities, in the sense, if this happens, then this should happen. If not, then what? And when you align your mind with that way of thinking, you can then prevent yourself from getting caught up in emotions. The only thing that's going to bring you to an emotional state in your trading is if you're using too much money. And if you're using high leverage, then expect to get thrown in the bin by our beloved market makers who provide us the service to be able to use leverage. Be smart with it. Use small capital, and if you are going to be using high leverage, use more of their money, less of yours, so that it's not that much of a big hit, okay? Now, here we were looking at Solana in last night's projection. We wanted to see Solana try and hit the 153 region. Now, what was it based on? Well, just look at the New York session. We can see that in New York, they had moved price up and then they just traded sideways. No real activity. And the logic was I wanted to see Solana move up towards the 153 zone, okay? Now, we go over to Solana itself and you can see that they did come up and clear that 153 region where they actually came and hit the 155. But what you can see is during the New York session, it can be a little bit choppy, okay? That's why when you're trading the New York session or you're trading the Asian session, the first thing that you want to look for is you want to look at how the New York session primes itself and say to yourself, okay, if there is volatility in the New York session, then fine, I'm able to grab the volatility. If there isn't, then I'm expecting that in Asia, there probably will be. So if you look at the Asian sessions, you can see that during the New York session, they make a move up and then they come back down and then they consolidate. But in Asia, they end up coming back towards previous Asian sessions, and then you do see some nice movement higher. Again, New York session, you can see they move up in the first instance, and then they're trading sideways. They then mark it down in Asia, and then they made the move to the upside. So what you're looking for is, in the New York session, you're waiting to see if New York can establish a range. And if New York, in the first instance, hypothetically, this is the New York session, okay? And then what you've got is price makes a move up in New York and then consolidates. What you're looking for in principle is by the time the Asian session opens, you're waiting to see if they're going to come back and recover vector candles down here that were made in the New York session, or look to seek any other external areas that they could go to where there is interest from traders. So in this instance, you can see that Solana had actually made the move from the New York session. They made the move higher, then they made the move lower, and then they broke away from that point, taking out the psychological high and then going in to test the same zone that they had previously sold from. And you can see that Solana is actually moving down from that point. So hypothetically, if the New York session comes into play play today and you see Solana coming down, anticipate that during the Asian session, when there is less volume and a little bit more of a smoother price action, you'll then be able to see if you can trade back into any vector candles that have appeared in the New York session. So an example would be like this. So let's just go over and look at this. You can see here during the weekend, you can see that they actually marked prices lower and then they marked prices back up. Then in the Asian session, they came back down and recovered those vectors. Then you can see over here in the New York session over here, they had marked prices up and came back into the previous vector candles where they had initially sold off from. So this is for anybody that is going to be using the Asian session. Maybe you are time sensitive and you can't trade the New York session. But I will say that there are instances in Asia where they may keep it pretty tight and not really move too much. What you're looking for is you're looking for vector candles that have been formed in previous sessions like the New York session, and you're looking to see if there is a range above or below that they could actually go towards, and you'll be able to use the vector candles to justify that case. If you want to learn more about that, just go and take the free course on the Traders Reality website where I break down the purpose of the sessions and the vector candles so you can understand how to utilize them. Okay? Now, before we finalize it all, ladies and gentlemen, for anybody new to the channel, go over and check out BTCC. It's great for anyone that is in America because you do not need KYC or VPN to actually trade on leverage with this company. You can also trade the NASDAQ, the S&P, gold, silver. You can buy NVIDIA stock because they've got tokenized stocks on there as well. But if you do join, once you do join BTCC, then head over and join the actual trading competition. Okay, it's $60,000 prize pool. We've already got 20 participants, and you can go down, you can see that so far, this dude right here with 339,917. Wow, that is pretty interesting. He's doing very well there. So he's going to be sitting very nicely at the top and he's going to be eating that 60K prize pool. He's doing very well. So mad love to this guy. He's doing great right now. So this guy's killing it. Oh my days. These guys are absolutely killing it in this platform right now. Unbelievable. So you can see there is fierce competition on this platform. Remember, what you've got to do is join BTCC first with the link in the description and then register for the tournament. Otherwise, you won't be able to join it if you just simply register for the tournament. So you've got to go towards this BTCC platform here, join with that link, and then register the platform over here. Okay? Cool. So to finalize it all, ladies and gentlemen, that little strategy for the guys who may be time sensitive and they want to be trading only certain sessions, what you're looking for in the Asian session is to see if price is going to come back into previous vector candles that were made in the New York session, or look to see if price can actually take out a specific range. Now, that might be a previous Asian session high or a previous Asian session low. But the key tip to this approach is to look at what they did in the previous session. So for example, if you're looking at price and it's going up in the Asian session and it's recovering vector candles that have been done in the New York session, when you're looking left, make sure that you can see an Asian session high and pay attention to what they did at that high. Because if they do actually go to that high and they start to stall, then the market's memory will be triggered, and then that will tell us that that's an area that they could be selling from. So that could be an area that you could start selling from too. With that being said, ladies and gentlemen, I hope you've enjoyed today's video. Please trade safely. We do have the 10-year bond auctions coming out later on today. So there will be a bit of volatility around 6 p.m. UK time, which is roughly around 1 p.m. Eastern Standard. Okay? With that being said, mad love and respect, and I'll be checking in with you all soon. Peace.